Something huge is happening in the world of tech. Right now, in early 2026, four of Hong Kong's absolute biggest tech stocks are in the middle of a massive reinvention. We're talking a complete rewrite of their playbooks, and it's all being driven by national strategy and some really intense global pressure. So let's dive in and unpack what this great reinvention is all about. The companies at the heart of all this are names you'll definitely recognize: Alibaba, Tencent, Xiaomi, and BYD. Each one is making an enormous bet on the future, just pouring billions into things like AI, electric vehicles, and global expansion. So the big question, the one we're going to explore today, is this: are these incredibly bold new strategies actually going to be enough for them to win? To really get a handle on their moves, we first have to understand the world they're operating in, because right now it's a scene of, well, renewed energy and incredibly high stakes. At the start of the year, the market just came roaring back to life. And this wasn't some random fluke. No, it was fueled by this fresh wave of optimism about government stimulus and a huge policy push to support the digital economy. You could just feel it. Investors were betting that China's tech giants were officially back in the game. And that brings us to the core engine that's driving this entire transformation: a massive national strategy all about technological independence. This is the why behind literally everything these companies are doing right now. At the very heart of this strategy is something called the AI Plus Initiative. Now, this isn't just a friendly suggestion, it is a national mandate. It's basically forcing these huge companies to evolve from just being platform providers into becoming the fundamental architects of the country's entire new tech infrastructure. This quote right here really captures the whole shift in approach perfectly. The idea of moving from freehand brushwork to meticulous execution, that says it all. We're talking about a move from broad ideas to precise, detailed plans. This is the 15th five-year plan in action, and it's a crystal clear signal that there's a very serious, very detailed economic plan at work here. And the ambition here, it's just staggering: a 70% AI penetration rate by 2027. I mean, just think about that for a second. That is an incredible target, and it really shows you the sheer scale of this AI Plus initiative. It's a full court press to weave artificial intelligence into every single corner of the economy. Okay, so this is where it gets really fascinating. How are these four titans actually responding to this challenge? Each one has chosen a totally unique path, a really distinct strategy to navigate this new world. So, first up, we've got Alibaba. Their response to US chip restrictions is pretty incredible. They aren't just buying AI components, they are building the entire stack themselves, from the hardware all the way up to the software. They're literally becoming a core architect of China's AI future. And you can see this strategy playing out right here in the numbers. Alibaba's own chip division, T-Head, has developed a processor with specs that are designed to be right on par with the restricted export version of NVIDIA's top-tier chips. This is self-sufficiency in real time. They're basically saying, fine, we'll just build it ourselves. But it's not just about the hardware. On the software side, their latest AI model is getting some truly stunning results. It got a perfect score on a graduate-level math contest. And look at the bottom there. It generated over a 22% return in a 2-week live crypto trading trial. This shows a huge leap in complex reasoning and real-world performance. So while Alibaba is looking inward, building its own foundations, our next titan, Tencent, is looking outward. Their strategy is all about de-risking by going global. They're aggressively scaling their massive gaming empire on the world stage, and they're shifting from just being a passive investor to being a much more hands-on operator. And the results? Well, they kind of speak for themselves. A 43% year-over-year explosion in their international gaming revenue. This is not a side project anymore. This is a core pillar of their new playbook, and they're aiming for their overseas business to make up more than a third of their total gaming income. All right, now for Xiaomi. The smartphone giant has jumped headfirst into one of the most competitive markets on the planet: electric vehicles. And their story for 2026 is really defined by one incredibly audacious goal. They're aiming to deliver 550,000 EVs this year. Now, to put that into perspective for you, that's a 34% jump from what was already a really impressive performance last year. It is a massive statement of intent to become a dominant player in this space. So, how are they going to get there? Well, with a rapid-fire product launch. They've got 4 new or updated models planned for this year alone, and they're targeting everything from family cars to executive sedans to a direct competitor for the Tesla Model Y. They are basically carpet bombing the market with options. And finally, we've got BYD, which has maybe the most unique strategy of them all. Instead of just focusing on making the cars, they're focused on mastering the entire supply chain. And they're doing that by taking control of their own global logistics. This means they can shield themselves from the crazy ups and downs of global shipping, which could give them a huge advantage on both price and reliability. To make this happen, they are literally building their own fleet of gigantic car-carrying ships. And this number, 7,000, that's the number of cars that can fit on just one of these new vessels. This kind of vertical integration gives them this unbelievable level of control, letting them bypass global bottlenecks and get cars to international markets faster and maybe even cheaper than anyone else. Okay, so four titans, four very different, very bold strategies. How on earth do investors make sense of all this? Let's take a look at how analysts are trying to put a price tag on these massive reinventions. Well, analysts are basically using two main ways of thinking to size up these companies. The first is the classic Warren Buffett approach, which looks for a moat, a durable advantage that's super hard to copy, like a dominant brand. And the second is the Peter Lynch approach, which is all about finding growth at a reasonable price, looking for companies with a low price to earnings growth, or PEG, ratio. So here is how it all shakes out on the scorecard. And what's really interesting is that while Xiaomi actually scores the highest on those growth metrics, it's Tencent and Alibaba that lead on overall quality and stability because of their powerful moats. So Tencent is seen as the safest bet, while Alibaba's big push into AI gives it this huge potential upside. But the story isn't just about four companies changing their strategies. It's really signaling a much, much larger shift in the entire tech world. So let's zoom out for a second and think about what this all means. And that brings us to the final, really provocative question. As China's tech giants build for self-reliance and Western giants build on their own separate platforms, what happens? What does that mean for the future of technology, for innovation, and really for all of us caught in the middle? In the end, it might just come down to something like this. Some analysts are suggesting that China's tech growth isn't just a simple function of investment anymore. No, it's now investment multiplied by a self-reliance index. And this formula, it really captures the essence of this whole great reinvention, a new era where technological sovereignty isn't just a goal, it's the critical variable for success.